What's up everybody? Welcome to the Stocks channel, the place where the triple Qs drop 5% on Cinco de Mayo for celebration. Today we saw a massive sell-off, which should be no surprise because we're coming off of resistance in a very strong downtrend. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today on SPY we were down 3.55% and we got that strong rejection at resistance at 428, which should be no surprise because we are in a strong downtrend, which means bears are going to show up at resistance and bears are going to try to make massive profits by shorting at resistance and setting up great risk reward trades, and that's exactly what you should be doing as well. Remember, I made this connection to the last couple of years where the bulls were buying the dip off support. This year is no different. Just flip your chart upside down and the bears are shorting at resistance. Remember that the trend is your friend, and right now this is a strong downtrend, which means you should be expecting lower highs and lower lows. And right now, essentially what we had was a triple top look. And don't forget that that was a short squeeze yesterday after FOMC, so you cannot look at that breaking out at 428 as a bullish breakout without any sort of follow through. Did you see any sort of follow through with today's price action? Absolutely not. We gapped down and closed near the low of the day, even though we did see some buyers stepping in late in the day or shorts covering their short positions right around that support level. So don't mess around trying to go against the trend thinking you're the best trader in the world. If you're trying to take long trades in a downtrend, you should only be doing so at very strong support. So yes, we are at strong support down here right around 410, and as you can tell, buyers have already started stepping in at that level. But if we break below 410, we are very likely going to our price target to close the gap at 400 or down here right around 393. So this is a downtrend until it's not, and that means we need to see bullish price action to break the downtrend before we can say the downtrend is reversing. We cannot assume anything, and just like a bull market where you don't know how high it can go, in a bear market you don't know how low it can go until it reaches $0 where it bottoms out and finds strong support. So obviously SPY is not going to $0 and it will find a bottom eventually, but we don't know where that's going to be, but we do have a good idea that it's going to be somewhere around $400 or 393. If you don't think we can go that low, well, I guess you're going to find out eventually anyway, or we're going to see the bullish breakout where the bears are hiding out at 438. So if you think about it, a lot of the big bears are not even trying to short this market until we get to a major resistance, and we're already seeing a lot of bears stepping in at 428, and that just goes to show you how strong this downtrend is. And there's a lot of confidence in a strong trend that buyers and sellers are going to step in at strong resistance and strong support. Since this is a strong downtrend, the bears are going to show up at every single resistance level possible, and they are going to do their best to drive prices lower because they want to make profit and they want to trade in the direction of the trend. So right now on SPY, you're not getting bearish for the next leg lower unless we break below 410, and then it should start to accelerate to the downside to close the gap at 400, even though we could still find support at the top of that gap right around 403. So watch for support at 410, and below that you're looking for the price targets below, and the next bullish breakout, like I said last night, will be above 428 for a quick trip up to retest resistance right around 438. I don't think a lot of bears are going to survive the short squeeze above 428, so I do think above 428 will be a very impulsive rally to the next resistance higher, and that is where we'll see a lot of bears hiding out, getting ready to try to drive the market lower. So your next bullish breakout at this point is above 428, and then we should have bullish confirmation that we're reversing the bear trend if we can start closing above 438. Remember, make the price action prove everything to you, and if you're not sure what to do, make sure you're at least trading in the direction of the trend. It's a downtrend until it's not. Hammer that into your brain, and don't forget that this is not going to reverse until we start seeing higher highs and higher lows, and we just don't see that in the price action. On the NASDAQ 100 triple Qs, we had the Cinco de Mayo celebration going down 5.04% today and coming all the way back down to retest the lows at 309.6. And as you can tell from the candle, we did make a brand new low today, even though it was only by a couple of cents. So when you see brand new lows and you see a bear trend, it is very obvious you are in a bear market, and the NASDAQ 100 is already telling you it's in a bear market because it's already seen a drawdown of over 20% from the previous all-time high. If you're still in denial about a bear market, maybe today changed your mind about that decision, but as you can tell, we still have the bear trend and we still have extremely bearish price action. But in every bear market, you still can see very impulsive counter trend rallies, as we saw with FOMC. So coming off of these lows, you do have strong support right around 309 and 303.5, and there's a real possibility that we haven't even seen the real counter trend rally yet. So in the event we do start to bounce off of these support levels, you're looking for the bullish breakout above about 325, and we still could test that resistance zone right around 334. Now you can very clearly see that we have a resistance trend line, and with yesterday's price action, we did get very close to testing that resistance, and today we're seeing another drastic sell-off. There is no coincidence that in a strong bear trend that bears are showing up at resistance, so hopefully this didn't come to you as a surprise. Even though this was a drastic sell-off, you shouldn't be surprised that the bear market is going lower because it's going to be filled with lower highs and lower lows. This was very high volume selling, so we need to see a bullish breakout before we get any confirmation of a trend reversal. So wait for the breakout above 325 and then the next bullish breakout above 334. And all of the big boys that are just dying to short this to the next leg lower are going to be sitting up here right around 347. And that's why we have this beautiful picture of a bear just sitting at that resistance level. On the Dow Jones, we were down 3.04% today, and the Dow Jones is the easiest market to read right now because, as you can tell, the Dow Jones came all the way back up to critical resistance, which is exactly the resistance the bears are going to short at. We hit the 20 simple moving average, we have the bear trend, and we were at the critical resistance of 340. So it should be no surprise the bears were trying to drive the market lower after a day like yesterday. So we're down now over 3%, back below 333, and retesting support at 326. Now there's still the possibility 326 will hold up as support for the second attempt, but if we do break below that level, you're looking for the next leg lower at 322.6. Bullish breakouts at this point are back above 333, and then of course the confirmation of a bullish breakout will be above 340, which means we should attempt to close the gap at 347. Make the price action prove everything to you because right now this is a downtrend until it's not, so you shouldn't be expecting any bullish breakouts until the price action confirms it. On the Russell 2000 IWM ETF, we were down 4.06% today with a hard rejection at that resistance at 191.5, and we did gap down below that support. So that support was not even able to be utilized by the bulls because the bears were able to gap it below support in the overnight session. So like I said and many times before, this is a downtrend across the indices, and you're going to see bears showing up at resistance. And for IWM, that was the negatively sloping 20 simple moving average, which was right around 195. So right now, this is a retest of support at 183, but if that support fails, you're looking for the next leg lower at 177.6, and below that, the price target is right around 170. The bullish breakouts in IWM will be above 199 and then closing back above 205, and not any sooner than that because this is a confirmed bear market. Make the price action prove everything to you, and don't get FOMO of upside when you're in a strong downtrend because it's going to take a lot of work for the bulls to reverse the downtrend. So either get comfortable being a bear or just go into hibernation as a bull until we see some bullish price action. On the ARK ETF, we were down nearly 9% today, and that really shouldn't be surprising because this ETF does nothing but go lower because it's in such a strong bear market. Yesterday, we bounced all the way back up to resistance at 52, and like I've said many times, bears are going to show up at resistance. We're back down to support right around 47, but if that level breaks down, you're looking for a quick trip down to the next leg lower at $40. Bullish breakouts at this point will be above 52 and getting back above 59, and then we could try to go close that gap at 66. So don't get bullish until we can at least start closing above 59, and not any sooner than that because this is an extremely strong bear market with an extremely strong downtrend. In the VIX, we were up over 22% today, and the VIX bounced right off of that support zone right around the 20 simple moving average and the 50 EMA and closed all the way back above 30. Remember, the VIX has a bull trend and the VIX is back above 30, so this is completely risk-off behavior in the VIX, which means we could be seeing that VIX spike up to 38, which could mark the next critical bottom in the stock market before we see the next counter trend rally. So VIX above 38 means extremely risk off, and look for that strong resistance zone on the VIX right around 38, and you're not getting bullish until the VIX starts crushing back down below 24. On Bitcoin, we're currently down over 8%, and Bitcoin is slicing right through that critical support zone at 37,000, even though we did look like we were getting a bullish breakout from the falling wedge. As you can tell, bears showed up at the negatively sloping 20 simple moving average. So hopefully you're seeing a common theme here that in downtrends, bears are going to show up at resistance. So you need to watch all of these critical resistance zones. And if you're taking long trades, you need to lock in your profits and not get greedy. Below 37,000, we could see Bitcoin get a little bit of a false breakout to the downside and then another impulsive rally, which could be a counter trend rally. But more than likely, below 37,000, we're coming back down to the support zone right around 35,000. And below that, we're coming all the way back down to 30K. So be very careful because just like the rest of the indices, Bitcoin is in a bear trend and currently getting rejected at resistance and failing at support. On Nvidia stock, we were down 7.33% today as Nvidia gets rejected right around the 20 simple moving average and closes back below resistance, which was right around 199, and we're back down to the support zone right around 184. If 184 fails to hold up, you're looking for support at 179, and below 179, we're going to start trending down towards the price target at 150. Upside bullish breakouts will be above 210, and then above that, we have strong resistance at 223 and the gap fill at 230. I still think Nvidia needs to retest resistance at 210, but as you can tell, the bears are very strong in this stock and they are not allowing the bulls to get up to that resistance level. Continue to respect the strong downtrend, and even though we could be building very strong support down here right around 184, get ready to jump ship if we lose that support level and start breaking down below 179. On Tesla stock, we were down over 8% today, and Tesla sliced right back down through $900, which means we are risk off in Tesla stock yet again. We are still holding above that support level at 857, but we can easily break down through support levels when we have a bearish trend, and we do have a bearish trend in Tesla stock. So below $900, you are risk off, even though we do have support at 856 and 828. But with the trend, we're more than likely eventually going to break down through support, which means we should be coming all the way back down to retest the lows at 762. You can get more bullish above 900, but you still have strong resistance at 937 and right around 955. So continue to remain risk off below $900. On Apple stock, we were down 5.57% today, and Apple stock had a very bearish candle getting rejected directly from the 20 simple moving average and coming all the way back down to support at 156. As you can tell, 156 is a very strong support because every time Apple gets there, it does find buyers, but there's still the possibility that level does break down and we come back down to retest the lows at 150. Your bullish breakouts are back above 166 and not any sooner, and above 166 we will have strong resistance at 168, but above 168 will very likely go fill the gap at 174. This is a strong downtrend and we're back down to critical support, so you're getting very risk off if we lose support at 156 on Apple stock. On the financial sector, we were down nearly 3% today and we're back down below critical support, and we still have a very strong bear trend, and there is no way the financial sector looking this weak is bullish for the whole entire market. This is extremely risk off price action and very strong bear trending, so you still need to be very cautious of more downside. The industrials were down 2.61% today, still with the bear trend and still with the bearish price action, so I continue to stress this is a strong downtrend and you need to be very careful. The healthcare sector was down 1.94% today with the price action below all the moving averages and developing more bearish trending. The energy sector was down 1.5% today, but just cooling down after making a new 52-week high, and we still have the bull trend and we still have the bullish price action. So jumping back over to the S&P 500, I can't stress it enough that the trend is your friend, and that applies for any market condition you find yourself in. Right now, this is a strong downtrend until it's not, and we need bullish price action, and we need to reverse the bear trend before we start thinking this market could go bullish. You can't assume anything right now, and you need to follow the chart. And the chart continues to remind you that this is a bear market with very bearish price action and a very strong downtrend. So continue to respect the fact that we're more than likely trending down to the lower price targets at 400 and 393, and you need to see some type of bullish price action with a confirmation of a trend reversal before we can invalidate the lower price targets. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. You can see even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.